Yeah, hello guys and welcome to another video. In this video, I'll be scalping a $10 account and I'll be trading key levels, guys. This is a $10 account. If you see here, this $10, I have $10 in this account already. So, and as you can see, I've not made any trade for today, and this is today's date actually. So let's see how it's going to go. The assets I'll be trading are synthetic indices. If you don't know how to set up and trade synthetic indices account, I dropped the link to the video on the description of this video, so do well to check it out. What I'm going to do first is to identify key levels, look for assets and identify key levels. Okay, I'll continue this video once I see an asset that meets my entry conditions. Okay guys, this is volatility 10 index and this is the 15-minute time frame. So I've identified a key level here. I'm expecting price to touch this red line here. He has touched it before and came down. I want it to touch it again before I enter his sell. How do I know it's a key level? Here the price got to that same level and reversed. And if you keep going back, it tested this same level somewhere here. The same thing here, the same thing here, the same thing here, the same thing here, the same thing here. So the same thing here, the same thing here, and the same thing here. So if you keep going back, you see that it's been testing that level. So I'm expecting a reversal. So I'll wait patiently once he gets to that line. I'll enter his sell, and I'll be risking $1 on each trade. Yes, I'll continue this video once it gets to that level. Okay guys, I actually entered this trade, this volatility index. I actually entered this trade at this level. I was not able to record it because it really moved very fast. But let me tell you that I lost the trade. So I placed a sell and you see it broke that level and didn't trade. So I incurred a loss. I reached $1 on the first trade. So I picked another key level here. So I picked another key level here, which is the tip of this guy here, as you can see. So I felt that it's gonna reverse. I picked another one and it didn't. So I incurred $2 loss already. So I now went back to step index. This step index. So as you can see, I identified the key level at this level. This is the level. This is the key level. Why is it the key level? You notice that from here it reached at this level and it bounced back a little bit, and it reacted here. Then going far back, okay, okay. You notice that this level, at this key level, it tested twice here. It tested here. It tested a very strong key level. So that is why it tested here also. That is why I entered the same thing here. See, 1, 2, 3, 4. So this is a strong key level on step index. So that's why I entered a sell at this level. I couldn't record it because it really moved very fast. So I entered a sell at this level because I know it's going to reverse, and which actually did. So I have taken my profit already. And if you can see here, let me go back to our charts. Okay, I use a very tight lot size and I'm risking only $1. So the stop loss is really very tight. The first trade I incurred loss, second trade I incurred loss. Okay, third trade I even incurred loss. I took it 3 times, so it failed 3 times. So I was down by almost $3 here. So the step index, I saw the step index, I know it's gonna reverse because I used a very tight. That's why I lost the first trade. At this point I was down by almost $4 plus. You understand? So then being sure that it's gonna reverse, so I took another trade and it went the way it went, giving me $6.45. So guys, I'm up by $2 profit. So we are still gonna continue. So I'll go look for more trade opportunities and I'll tell you how it goes. Okay guys, I just entered a new buy here at this key level here. This is for like 75.S index, and this is a key level. As you can see, it was tested here, tested here multiple times. I'm expecting a reversal at this level, which is already happening. This key level was tested here, it was tested here, it was also tested here, it was tested here, it was also tested here a little bit. So it was tested here also. Oh, let's see, because you're on profit, let me show you one thing you don't know. Assuming you want to take part of the profit, I've done a video on how to do that. I can easily do it. I'm up by $1. I can decide to take part of the profit, which is close. Then I'll reduce this. Okay, probably I want to close 3. That's 0.35. Okay, I'll close part of the profit. Then I'll leave this one to continue running. So I can just set my stop loss at the level of my entry, which is somewhere, which is 9371.48. 9371.48. Modify stop loss 9371.48. So 97.48. Modify. So guys, as it is, I've already set my stop loss at the level of my entry. As you can see, it's going to the direction of our speculation. So this is a strong key level. This is a major key level. So that's why it reacted the way it's reacting. Once it's $1, I have to close it. So now you understand how it works. I've done a video about key levels. I think you should check it out. That way you understand better what key level is all about, guys. You understand better what key level is all about. So I'll continue the video once I close the trade. Okay guys, I'm back to the trade. It reversed and hit our stop loss, as you can see. So the trade definitely closed on the first profit we initially took. So that's the trade there. So this is the first profit. This is why it's important to take multiple profits. You see, had it been we didn't take that profit, we have lost that already. And this is a $10 account. For a $10 account, every cent matters a lot. So we won this trade. So I'll still go look for other trade opportunities. Okay guys, this is another key level. This green candle hit that key level and reverse, as you can see. Why is it a key level? You see that here, this level was tested here. It was also tested here, here, and here. So if you keep going back, you see that this particular level has been tested multiple times. So here, let me test it here. So I was expecting a reversal. Actually, I should have entered a sell at this level, but I was not looking at the chart as at the time it got to that level. So by the time I looked at the chart again, it has reversed already. I'm expecting it to still test that level and reverse back. But if it doesn't, then this is just a missed opportunity, guys. This is just a missed opportunity. That's one of those things. Okay, guys, this is another trade I entered on a key level. This is volatility 301S. I'm on profit. I've taken my first profit already. The reason why it's on a key level, if you look at the level I entered, you see that it was tested here, it was tested somewhere here, it was tested here, it was tested here, and if you keep going by, you see that it's been tested multiple times in the past. So if you look here, you see that it was also tested here and was tested here. It did a break and retest somewhere here, and it was also tested here. So this is a major key level which must react. Price must react when it gets to a major key level. So it reacted, so I took the opportunity to enter a sell. So I've already set my stop loss to, as you can see, to the level I entered the market. So if it reverses, I won't have to lose anything. But if it keeps on going down, it keeps giving me profit until it meets the risk reward ratio I targeted for this trade. If it goes back, I have nothing to lose. I've already made profit. That is how to trade a $10 account, guys. So once I close this trade or it closes by itself, I will conclude this video and I'll share some very important tips when you're trading a small account. If you're trading with $10 and you make a profit of $3, that's 30% of your investment, which is very good. If you're new to trading, I will advise you start with a smaller account. If you start trading with large amount as a beginner trader, if you incur losses, the chances that you continue trading is very rare. Learn how to be profitable on a smaller account. Trust me, if you can profitably trade a smaller account, then bigger account won't be a problem for you guys. Bigger account will be a problem for you. I'll conclude this video now because I don't want it to be too long. So we started with $10 and we closed with $13. That means we are up by $3. These are profit. Made a profit of $3.13. cents, which is very good for a $10 account. And this is what I want to explain. If you look very close, you see that the first 4 trades closed on loss. This is what you should understand. If you haven't adopted a very good risk management, you would have blown this $10 account. Why didn't I blow this $10 account? One, I used a stop loss. I risked only $1, not all the $10 in my account, as you can see. The thing is, if I hadn't used a stop loss or risked only $1 of my capital, you find out that only the first trade would have wiped out this $10 account. Only the first trade would have wiped it out. The first, second, third, and fourth trade closed on losses. At this point, I've incurred loss of $4 plus. You understand? But why was I very sure that at the end of the day, I'm going to close on profit? Reason being that I used a risk-reward ratio of 1:10. Because I used a very good risk-reward ratio, that's why only one trade was able to recover all the previous losses and still give me profit. Here you see that I made a profit of $6.45. First, I took my first profit, which you already know how I do that, and allowed the rest to run. So when the price started approaching a strong key level, that's when I closed the whole of the trade. The same thing here. We took our first profit, so the trade did not continue and it reversed. We did not lose any money on this trade. This trade tells you the importance of taking multiple take profits. So that's it for this video, guys. If this video was helpful, don't forget to like, share, and also subscribe to the channel if you're new. Talk to you on my next video.